What is going on? Welcome back to the channel. So today I want to talk to you about SoFi. I want to go over some of the data points, what moved it and what shorts did. Before we get into any of that, make sure you guys hit that thumbs up. And with that, let's get right to it. So SoFi did have a pretty rough day alongside the greater market. So SoFi went down 4.21%, 1875 the high, 1758 the low. And we did see a little bit higher volume today, so 82.5 million shares being traded. But once I go over some of the institutional transactions, might not be, I guess, the greatest. A lot of the volume, though, mind you, based on the flow, did come from algorithmic trading. So there's a lot of negative things kind of floating around. One is just, it looks like the States is now very strategically positioned to strike Iran. So people are kind of assuming that is going to be coming sometime over the next couple of trading days. In addition to that, though, today the market was digesting everything associated to Trump and the grayness about the tariffs. So Friday after hours, he did sign that 10% global tariff to then pretty much increase it to 15%. Based on some of the comments that he was making today, people are assuming that potentially 20% or even 25% is on the table. So definitely interesting times. We didn't really have that much in data points today, so it was more of a reflective day based on, like I said, everything kind of coming out. Associated to SoFi, though, there was no new analyst ratings. A lot of people are really just looking at now the market cap, really starting to panic over how potentially it might not be included or thought about or qualified, I guess, to join the S&P 500. So Tanner even brought that up, saying that it's below the 22.7 billion market cap, whereas technically right now it shows 24.26. So I think a lot of different platforms, depending on what they have for the actual outstanding share count, might differ slightly, but nonetheless, clearly this is what people are kind of paying attention to. So the only thing that Anthony really brought up or kind of posted recently was just saying yes, but based on the timing, I think that was the Canada-US gold medal game, which the States did win. So I assume maybe it's related to that, or maybe he has some good news coming down the pipeline. I'm not really sure, but nonetheless, is still SoFi is just pretty much at the mercy of the broader market. Shorts didn't really do that much. They increased about 55,000 shares today. 8.9% of the free float's being shorted. Works out to be 112 million shares overall are being shorted. As you can kind of see from the teal line, shorts honestly didn't do too much at all. Whereas yesterday, or sorry, I guess Friday, they were playing some sort of weird game. You can kind of see that they mass returned and then doubled down. Whereas today, yeah, they didn't really do anything whatsoever. Looking at the options, we had 30 million in calls, 26 million in puts. 45% of all the options being done were bearish in nature. From a bull standpoint, you see a consensus for it to be roughly around 19 to 1950 for the most part. Bears are anticipating for it to be sub 1750 to 18. So where we are now, there's definitely a lot more upside, but clearly there is a lot of bearishness as well. These are some of the transactions that did occur on the secondary market above $100,000. So regrettably, you do see a lot of selling. So anything with a bid is a sell. So some of the big ones, 33.5 million, that was done close to the end of the day. So that was a sell. First thing we had a buy, 5.3 million, and then a couple here and there. But based on the dark pool, we did have clearly some hedge fund exiting SoFi, and that was done pretty much first thing. So that is what really started the kind of sell-off, unfortunately. But right here, it was two separate transactions, 19.2 and then 19.1 million. So unfortunately, not the best. And again, it's a little bit more difficult to distinguish what's buys and sells based on the dark pool. You kind of just have to see what happened before and after, and then kind of compare it based on what happened on the actual chart. So that's why it's kind of fair to assume that these two transactions really kickstarted kind of the sell-off, unfortunately. So big money is not really buying the SoFi dip right now, but with it closing at 1822, it is trading between this S2 and this S3, so 1744 is going to be a strong support, and luckily enough that wasn't touched today, but again, clearly it was able to get to 1758, with no real support levels. So again, it's not far-fetched to assume 1744 could potentially be touched if we don't get some good market catalyst. One big catalyst though for the market is going to be Wednesday after hours, Nvidia earnings. That's if again SoFi and the broader market can kind of hold some of these key levels up until that point. But for right now, 1744 and then 2033 is going to be the next strong target / resistance point. So I'm looking at the 1-day chart on a side note. So these are very strong support and resistance points. Aside from all of that fun stuff on the actual chart itself, as I've mentioned, I'm not going to sugarcoat it. This is very bad, which is rather interesting. I feel like lately you've seen a lot of individuals, and I've kind of mentioned them here and there on this channel, really kind of spinning a narrative that we're going to see like a $30 push post if SoFi gets added to the S&P. If it does get added, I feel like it would kind of follow Robinhood and go up maybe like single digit, nothing double digit. So I think it's very far-fetched to assume that $30 is going to be on the table. I tried to find some of those original posts. I know Cole has mentioned those a couple of times, but I think they probably did delete them, rightfully so, because yeah, that's extremely far-fetched. So I think in general on the actual chart itself, if for whatever reason SoFi does get added third week of March to the S&P, best case scenario, we could be seeing that maybe 200-day moving average, and that's sitting at 23.29. But in all fairness, quickly popping back over here, this is the current ownership based on the 13 Fs that SoFi does have. So 53.9% is held by institutions, 1.58 individuals, 0.04 state-owned, and 44.48 is public / retail. So in general, like if that does happen, yes, retail is going to sell out and then institutions are going to take that, but still the most it'll probably go to is like 60%. That's not anything of any crazy significance. If I'm going to be fully honest, I think SoFi has been doing very good in comparison to a lot of other similar growth stocks over this last 6 months. A lot of stocks have been hit probably an extra 10-15% more. So getting added to the S&P 500 is good. Is it something to kind of stop what you're doing and cry over? Not so much. Unpopular opinion, of course, but that's what typically I like to do, unpopular opinions, and kind of just give you the straight and narrow, right? I'm not here to pump you up, not here to bring you down. I just like to interpret the data and give you realistic expectations. No different than when we were at like this range, kind of on the verge of breaking below that 200-day moving average. I did say most likely you could be seeing the teens coming right around the corner, and kind of lo and behold, that's exactly what did happen. If you think about it though, it's kind of crazy. Even from kind of end of January to where we are now, that has been a 29.52% kind of push lower. But aside from that, like I mentioned, nothing really new for any articles, no analyst ratings, so it is just at the mercy of the broader market. So let me know your thoughts on SoFi in the comments below. One final thing, pop over to my Patreon if you're looking for some solid buy signals on stocks, options, crypto. Put out daily day trades, numerous swing trades, worthwhile to pop over there and check that out. With all that, appreciate all of you watching.